Okay, so a very, very good morning, afternoon, or evening to all who've joined, or for this presentation, or should I say, guide on how on how to use an economic calendar and how traders use it, and also to understand the related terms. So, on behalf of FP Markets, we thank you for trusting us with your time, and I sincerely hope you come away from here a more knowledgeable trader. So to begin, I must say, and previous webinars so far this year have been hi Daniel, good to see you again. So as I said, the previous webinars this year have been directed at beginners, and the goal of the research team here is to help build traders a foundation with which they can work with, and not simply throw you in at the deep end. So I would encourage new traders to check out our previous webinars when they have the time. So the chat box remains pretty empty at the moment. So I assume we can all see the welcome slide, and I'm coming across loud and clear. Look, guys, if you can, please just throw a Y in the chat box for yes, if everything's all good and as it should be. Okay, I don't see anyone commenting at the moment. So look, guys, I assume it's all good. So I'm going to continue. If there's any issues, please do let me know, and I'll see what the support team can do for you. Okay, so before I roll things over, recordings are available for each presentation FP Markets produces. So you're free to watch the videos at your leisure. These can be found on the FP Markets website. Just hover over the resources tab, and at the top of the welcome page, and I believe it's under education, you will find the webinars, and also you'll find the bios of all the webinar presenters we currently work with. Alternatively, you can head over to our YouTube channel, FP Markets, and view the previous webinars there. So I rarely miss answering questions in these presentations, but if I do, or you are not clear on my explanation, please do go ahead and shoot the team an email at either Markets Analyst at fpmarkets.com, or alternatively, the support team at support@fpmarkets.com, and we'll reply as soon as possible. Okay, so just really quickly, guys, as usual, I have to run through this disclaimer. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. So really, guys, all this is saying is this presentation is not here to give you investment advice. It's not its purpose. What we are doing is offering an educational setting. Okay, so for anyone that's unaware of who's behind the mic currently, my name's Aaron Hill, and I'm the technical analyst for FP Markets. I apologize for regulars that are here that have to go through this every time, but it's just for the benefit of newer traders, as I said. So I have more than 12 years trading experience. I also recently completed the CFTe program, levels 1, 2, and 3. If anyone's interested in this, please do let me know, and I will happily provide you information on the course and how I passed all 3 levels. Also received the certified financial technician qualification, and this was simply because I completed level 2. And I also recently enrolled on the Chartered Financial Analyst program. For anyone that doesn't know, this is an incredibly intense program. It's one of the best according to what I've read, and according to the to other CFAs. And yeah, so if anyone's really interested in deep diving into the wonderful world of financial analysis, yeah, CFA is probably the place to go. For anyone that's interested in technical analysis, CFTe is also a worthwhile venture. So for me personally, I specialize in price action, Fibonacci, the relative strength index, and chart psychology. But really, guys, for this presentation, none of this will really matter because we're, as you know, the title is regarding the economic calendar. We have a question here. Are these available online? I assume you're referring to the CMT and the CFTe and the CFA. Yes, they're all available online, but for the CMT exams, I did minus, aside from level 3, levels 1 and 2, I did actually go to a physical center to take my exam, but all of the study is self-study. Yeah, they're all study, self-study from home. You can go to classes, I think, but with the current situation with COVID, I still don't think they've opened them up yet. I'm not sure. Excuse me, I'm not sure. But with the CFA, for anyone that's considering the CFA, I can assure you that it's incredibly intense. I mean, I received my books and it was like, I can compare it to house bricks, 3 house bricks piled into a box. It's incredibly overwhelming, especially when for the CMT, it was, so for the CMT level 1, it's a book of 600 pages. But for the CFA level 1, the CFA level 1 is 3,000 pages. So it's very, very different. For the CMT level 3, it's 900 pages. Just to give you some comparison. So if you really want to, as I said, deep dive into the world of financial analysis, the CFA is one to go. Do I ever sleep? No, I rarely at the moment. You can probably see by my eyes. But yeah, so okay, let's kick things over. Right. So what is an economic calendar? So an economic calendar is in place to, it's there to inform traders, investors, economists, and whoever else has interest in the economic well-being of a country's economic, shall we say, landscape. What this does is, in a straightforward manner, show scheduled news events in relation to the economy and financial markets. Do note that you will hear some analysts refer to news events as economic data and also risk events. This may confuse newer traders, but either way, they're all the same. They all mean the same thing. So economic data, risk events, and obviously the economic calendar. The economic calendar all mean the same things. Same thing. So it's data for a particular country, for a specific economic indicator at a specific date at a specific time. So economic indicators, as you can probably gather, are statistics, often on a macroeconomic scale. And what they are, they're designed to measure economic activity. So we as traders and investors, we employ these indicators to analyze the well-being of as I said, as I've already alluded to, a country's economy. So government organizations and also private groups release several economic reports on a weekly, monthly, and also quarterly basis, each measuring activity, obviously in a particular segment of the economy. Right. Okay. So widely followed indicators are employment. So when I say employment, I'm referring to I'm pretty sure most of us already know this, the NFP, the US non-farm payrolls, which usually generates quite a sizable reaction on the last Friday of every month. First Friday of every month. And then we have inflation, of course, the consumer price index or the producer price index, the CPI and PPI, and that's the gross domestic product. Growth, and then we're on to growth, the gross domestic product. So in terms of inflation, as I'm sure you know, inflation is a big key talking point at the moment, especially in the US and the UK. We're at considerable highs in terms of inflation, and that's where the central banks are stepping in. We also have things like the stock market, industrial production, and also we also look at housing figures as well. So the main point I really want to get across to you is no single indicator, much like technical analysis, right? So no single indicator can provide us with a clear picture of the economy's health. At best, each indicator provides what I would describe as is a snapshot of the current conditions. But when piecing the economic indicators together, you should get a clearer picture of how the economy is faring. Look, it's much like technical analysis, right? We don't just use, well, most of us don't just use support and resistance, right? We look for confluence. We look for trend lines to converge with the support and resistance. We look for Fibonacci ratios to converge with that support or resistance. It's the same thing. However, it's crucial to understand that some economic indicators are more important than others at certain points in time. So as I've already said, inflation, as of this presentation, is incredibly important. So other indicators to watch can be found on the statements from the central bank in their forward guidance. So what we're looking for is what the central banks are watching, and we want to be watching, and this is what we as traders and investors should be watching closely as well. So as a trader, the economic calendar is essentially your best friend. Although it will only take a few minutes to read through the economic calendar, it's highly advised that you do that, because it can really influence the outcome of a trade. I'll just give you an example. For instance, if you're long a currency pair and some negative news comes out against that currency pair, this can really put your position in an unfavorable location very, very quickly. So it's always good to be aware of what's going on the economic calendar. Most technicians do that, or should do that. And it can also, what it can also do is better prepare you for in terms of trade preparation. For instance, you wouldn't usually go long at a support if you know there's a high impacting economic release about to hit the wires. Some may not, but I personally would not. It's just my trading style. So it's just something for you guys to be aware of. Look, while the main focus is on economic calendars, the macroeconomic calendar here, I thought for the benefit of new traders here as well, I would mention that we also have something called an earnings calendar, of course. This will be important for traders who look at equities. So an earnings calendar is the quarterly schedule that structures individual release dates of financial reports that contain the performance data for publicly traded businesses. So many companies, as far as I remember, adhere to the traditional calendar. So there are four earnings seasons during the year, beginning in January, April, and July and October. There are a number of websites offering free access to the earnings calendar, so please feel free to have a look. We have Yahoo Finance, Market Insider, also NASDAQ offers a free, and also Investingcom, which is something I'm going to take you over in a minute. So I think that's enough for earnings right now, and I think I've rambled on a little bit too much. But the main point I really want to hit home here is the economic calendar lists scheduled risk events for specific countries. One other point, all economic calendars are standardized across the board. What I mean by this is, although I'm pretty sure some of us here will use the Forex Factory's economic calendar, which is absolutely fine, while others will use the Investingcom's providing. But just be aware that they are all producing the same data. They're just a little bit different and customized to that particular website. One second, I think we have a question. Where we have a question from Jim. Where can you find the historic movement of the stock market related to economic data, unemployment, That's a very, very good question. I think TradingView has something like that, but I think you have to pay. And I think for that kind of data, Jim, you would need to pay. But I think TradingView will give you, it depends on how much historic movement you're looking at. Off the top of my head, I'm not sure, but I know TradingView does offer the that kind of, I think that kind of data. Just have a look at that. I think you can also, I think TradingView is the only one off the top of my head. Okay, so look, as I said, economic calendars offer pretty much the same setup. And I primarily use, for me personally, I primarily use the Investing.com's economic calendar. But I know a number of you, as I've already said, will use the Forex Factory's calendar. As I said, though, both will offer a similar setup. So you can apply your knowledge you hopefully walk away from here today with on either calendar. So just bear with me. I'm just going to share my screen. Okay, so you should be able to see the economic calendar for Investing.com. But before I do that, I just want to switch things over to the FP Markets economic calendar. While it is relatively simple in nature, this calendar here, simplistic in view, it offers what we need as traders, right? So the great thing about this web page is the explanation, especially for us any newer traders here. The economic calendar categories. As you can see, it tells you what it means by when they say holidays, bond auctions, housing market, inflation, and central bank. So it's well worth a read. It's quite brief, but it does help get you on give you a foundation, in my opinion. Okay, so for Investing.com's, this may be a little overwhelming at first to look at, but really, hopefully, by the time you walk away from here today, this should all make sense. Sorry about that, Jim. I'm unsure of where to. No one's ever asked me that question. I've not really looked into that either. I'm pretty sure there are some that I'm not pretty sure. I know there will be some programs that will do that for you, but I would start with TradingView, and then work from there. Maybe do a quick Google search. I'm sure there will be a few data providers that offer that service. Okay, so on to the Investing.com's calendar. So first of all, I would encourage you all to register. You don't have to, of course, but I've registered, and I've also gone for the ad-free version, because if you don't, I can't remember how much I paid. It wasn't much, but the ad-free, if you look at this, I mean, you're welcome to open this as we're on the and follow along with your own calendar on Investing.com. But you'll notice that there's a number of ads, big ads, and it really annoyed me. So I paid for the ad-free version with this. Anyway, so first of all, I would encourage you to register and probably go for the ad-free version. Other than that, so the tabs at the top of the calendar is not really of concern for this webinar, but I will take you into my watch list. This is my own personal watch list. By signing up, you can create your own watch list. So as you can see, I have the currencies, the US equities, US equity index futures, the current prices, and you can have a number of you can create a number of watch lists. So strength for GBP, and safe haven currencies, majors, and things like that. So this is something I would highly recommend you looking into if you're interested in finding out how the markets are performing as a snapshot basis. Okay, so the economic calendar, let me just switch back to this. Okay, so the next layer of tabs, I guess you can call it, we have the economic calendar, the holiday calendar. Now, this is interesting. If you're interested in finding out where the bank holidays are, this will obviously close their cash market, the exchanges of that country. We also have the earnings calendar. So as I said previously, there's a number of providers, but this is, it's still loading. That's weird. It's not normally, it doesn't normally do that. But anyway, so you can click on the earnings calendar and it will give you the list of companies that are releasing their earnings. We also have dividends, splits, IPOs, and expiration. There we go. So yeah, so other than that, the main focus for this is the economic calendar. I'm unsure why why my feed is so slow today. Just bear with me. It's just loading up. There we go. Economic calendar. So with also just to be aware, we have also the Fibonacci calculator. If you want to calculate your own Fibonacci levels, I don't see the point in that, to be honest. I think the Fibonacci tool does that for you. The forex volatility, so think ATRs, average true range, and the currency's heat map. Okay, so that's something you may also want to look into. Okay, so below this, we have yesterday, today, tomorrow, this week, and next week. I'm sure this is pretty self-explanatory, but look, today, if you click on today, also make sure you set your time to your time zone. Obviously, I'm in the UK, so it's 11:22 GMT right now, and that will give you the times of your risk events. So you have today, tomorrow, this week, and next week. So if we click on this week, that will give us all of this week's economic data to be aware of, from Monday right through to Friday. Yeah, so again, pretty self-explanatory there. So we also have, let me just see, we also have the filters. Now this is an interesting thing. So we obviously don't want to look at every single country. So for me, this is the country. So select all. We don't want to select all, really. What I go for are the major countries, the major economies. So Canada, the Eurozone, France, Australia, China, Germany, Japan, New Zealand, South Korea, Switzerland, and obviously the US and the UK. Obviously, if you want to look at other economic indicators, you have the option here. As you can see, you have a number of countries to select from. Also, with the time, you can check display time remaining till announcement. So what it does is it gives you a countdown. So if it's very close, it will count down. So you have 20 minutes left and things like that. Or you can check display time only. With the category, this helps you select which economic indicators you want to look at. So if you only want to focus on employment numbers, you just clear all and then just select the employment. And if you only focus on the central banks, obviously click on just the central banks and things like that. So also we have importance. So with the importance, let me leave that. I'll explain that later. But and then if you want to apply your settings, obviously just click apply. All right, let me get rid of that. Okay, so onto the main calendar. So we have obviously the time. Again, look, this is pretty self-explanatory. These are the times that the respective indicators here will be releasing. So as you can see, we have what are we on today? Thursday, sorry. Thursday. And so later on today at 4 p.m. we have FOMC member Bullard speaking, and that's at 4 p.m. We also have FOMC members Mester speaking, and that's at 10 p.m. tonight. Again, GMT time. I set my time to GMT, so all these times will be GMT. Yeah, so again, pretty much self-explanatory. If you need any further clarification, please do ask me, and I'll go through it while I'm on the calendar now. And then it goes on to, it offers you the currency. So this is basically the country that the economic indicator is working with. So for instance, we have FOMC, again, that's from the US, obviously. The ECB president speaks, that's from the Euro. New home sales for Australia. So it's just all here. All the flags will show up here. And these will be obviously the countries that you've selected to filter at this point here. Just quickly, let me leave this a minute, just in case you're wondering what these are here and this is and all of this. Basically, all this is a snapshot of the current market. It has nothing to do really with the economic calendar. It's just something that Investing.com have there. I'm unsure if you can remove this or not. I've never seen the need to remove it. But here you can see the indices, the current indices, commodities, Forex and shares. And here you can see the same thing. So basically the same thing, but on a lower time frame. So as you can see, 5-minute time frame for the dollar yen. And it offers you a summary of whether that's a strong buy or a strong sell, and it offers you like the moving averages, position, and things like that. So it may be worth looking into. I've never really used these, to be honest. As I said, I use my watch list. That provides me all I need. And then further down, you have the most popular articles, and these are written by, I think, all Investing.com staff, most of them. She's particular, Kathy Leon. She's particularly important. Good to read from. She's really experienced and someone that I would highly encourage you to follow. So, and then you have finally, you have the central bank rates, and these are the obviously the central bank interest rates. As you may or may not know, the Bank of England recently raised its rates to its target range to 0.5%, so 0.5%. So yeah, back to the calendar, just in case you were wondering what these boxes were. Okay, important. So this is what I really wanted to talk about. So here we have 3 stars, which equals a very high importance. So what that means is when you have 3 stars next to an event here, it is considered to have a potentially strong impact on price action. Potentially, I say potentially, that's not always the case. But it's just to make you aware that, high volatility expected. As you can see on my screen, high volatility expected. So price could bounce either way following this release. With the, so always with these 3 stars, always pay close attention, especially. So for instance, if you have a trade on and you've put a trade on at 3 p.m., assuming you're in the UK with me, you put a trade on at 3 p.m. and prices, it's not doing much. And we have this event coming out, and you're on the euro dollar long or something. It's not ideal to be leaving your position open. You should have this detailed in your trading plan of what to do in situations such as this. For me personally, if I trade off a level and price is in profit, I would always try to reduce risk, at least reduce risk to break even, and take partial profits before an event like this would come about. Or if you're just so unsure of the event, simply liquidate the position. It's just not worth it. I've been in not when I first started, when I was 2 years into my trading, I made the awful mistake of not following my plan and leaving a position open. Actually, I moved my stop further away to give the trade some room to breathe. That was an awful mistake and cost me a lot of money, and it's not one that I've ever made again. They say that experience is your best teacher, right? And that certainly taught me. So I would always have that detailed in your trading plan of what to do in situations such as this. Anyway, so look, 3 stars, high volatility expected. 2 stars. It should come up moderate volatility expected. So that means that price may generate some volatility. It may not. You can see some strong moves off of these, but it's not really one that I would be too concerned about, to be honest. It's mainly these 3 stars, and also it depends on the country, of course. So if it's the US, it's probably it depends on the country and your currency pair traded, of course. So if you're trading dollar yen and it's a US release, obviously you need to pay more attention to this. And also we have the let me just try to see if we got any 1 stars. We don't have any 1 star. 1 star. Look, when there's only 1 star here, so all the rest are shaded. We only have 1 star shaded. This means that there's a low volatility expected. Look, I don't really pay much attention to them. I wonder if I've even filtered that, to be honest. I might have filtered that. Yeah, see, look, I've even unchecked that. So that's why you can't see it. So I don't pay attention to the low volatility indicators. So that's why you can't see it on the calendar. Let's get rid of the filters. Any questions? Nope. Okay, good. Right. Okay, and then on to all right, so onto the main event. So the event will tell you what the economic indicator is showing, is measuring. So, for instance, we have the UK employment data here on Tuesday. We have the RBA meeting minutes. Look, I'll just go over. So we have MOM. Where are other ones? We have MOM. We have year on year, quarterly over quarterly. Look, I'm going to go over these because I understand some traders may not be aware of what these mean, and that's fine. We all had to start somewhere. I do get that. So look, year on year. So we have year on year, month on month, quarter over quarter, year to date. We also have a few that's year to date over year, 3 months average over the year. And also we have another one. I can't remember. I'll remember it as I talk about it. Anyway, so look, so the year on year value, the annual value, as you might expect, is simply data that's compared with data a year prior. It's quite simple. You will also see that especially China data have labels like Q/Y. This is the data that represents the quarterly value compared to the same quarter a year earlier. And finally, you also see monthly data represented in the form of a monthly value compared with monthly figures a year earlier. But this is not really something I've seen a lot, to be honest. The main ones you will get are the quarterly over quarter. So where's the Q over Q? Over quarterly over quarterly there. And the month on month figures, you will see here, there we go. So the quarterly over quarterly figures, as I'm sure you can imagine, it represents data compared with the previous quarter. And month over month is the same and just represents values, monthly values compared with the previous month. Now, year to date refers to the period extending from the beginning of the year to the present date. So year to date. You will also see, as I've said, you also see some figures, some indicators labeled as year to date. I wonder if I can write on this screen. I'm not sure if I can. Yeah, I can. Year to date. Okay, year to date over year. Okay, so what this means is, and again, mainly I see these with Chinese releases. And so the year to date over year, and this tells us the year-to-date investment compared to the same period a year earlier. It's quite simple, really. The reason I'm mentioning it is just because it might confuse some newer traders, and this will save you just really searching it for yourself. You may see on some calendar events, we have the 3 month over the year. And what this represents is the 3 month average compared to the same period a year earlier. And this can be seen, this type of indicator can be seen in a number of economic indicators, including UK data. I think we have an example here. There we go. We have 3 month over 3 months, but there was one that showed, I think it might be this one. I'm not sure. There is some in the UK data which has the 3 month over year, but look, it's not here at the moment, so let's leave that for now. Right, so look, I think I've covered most of what I really wanted to show on regarding that. Let me just clear the drawings and get rid of that. Right, so clicking on the actual event. So the good thing about this calendar and also Forex Factory is you can actually click on the events to get some information. So here it gives you the information of what the event is about. It also gives you the previous data here. Obviously, you won't see it because these are the meeting minutes. Then it gives you related news. Show more. So let me just find another indicator which has some details. There we go. So as you can see, we can get all the previous data here from this point. And it also offers you a rather nifty little chart where you can use the 1 year, 2 year, 5 year, and it gives you all of the data that all of the economic the releases from previous months in this case. You can also change the chart style to this is mountain, I believe, and then we have the histogram. And you can also go maximum, so that goes right back to 1992. So you can get all of this data. And if you prefer to read it as in this kind of form here, you can find all of the data here, and it continues to go lower and lower. So the data here is really quite impressive of how much it offers. I assume Forex Factory does offer the same, but as I said, I do use Investing.com as my primary economic calendar. So this is what I'm used to. Okay, so let's whip back to the calendar. Any questions on this? I don't see any right now. Fantastic. So here we get over to the actual forecast and previous. How do you, okay, we have one question here. How do you use the economic calendar to forecast? I don't really use the economic calendar to forecast personally. I don't believe a lot of fundamental analysts will do that. As I said, what fundamental analysts do is they piece together the economic indicators and try to form a view that way. And also, it's all about the central banks, right? And I'll go over that at the end. That's a good question. So look, for me personally, I don't believe you can forecast from the economic calendar. There's a lot more that goes into it than that. But as a technician, I would always recommend you look at the economic calendar and pay attention to its releases before taking a trade and in the middle of a trade, during a trade. So yeah, look, let me just, so look, we have the, then we have the actual forecast and previous. So I hope this is pretty self-explanatory, but the actual release is the actual release that comes out, that's released on at 5:30. This was the release at 5:30. This was, let's go back down to here. So for Japan, the GDP year over year for Q4 was 5.4%. So it's lower than forecast. So these are the forecasts here. These values here, forecast. What these do is these are the collective opinions of economists, and they forecast their values, and then what that's done is then that's averaged up. So if you have access to Bloomberg and things like that, and Reuters, I believe, what they do is they give you a range. So you have the average, the median, sorry, which is the middle value of all of the collective, all of the economists' views. And you have the high and low range. So if, for instance, they're forecasting a 400K for NFP, there could have been a high within that forecast a collection of, say, 800K and a low of say 200K. So it's always good to know that. It's always good to know the range. So look, the forecast is particularly important, and the previous. Always look at the previous data. And this was the previous releases. Sometimes these are upwardly revised or downwardly revised. But yes, if for instance here, if price comes in worse than expected, as it says there, worse than expected, so we was expecting a 5.8% increase, we actually didn't get that. We got a 5.4%, and that could weigh on the Japanese yen. Likewise, we have the average earnings index for the UK. That came in better than expected. So that came in. So the forecast for this, the economists' forecast was 3.8%, but we actually got a 4.3% print, which should have really underpinned the underpinned sterling. Any questions on this? Please do let me know. Yeah, I think I've really covered most of this. There's a few things at the bottom of this calendar I really wanted to touch on. So this is the legend for the calendar. Speech, if you want to listen to the speech, I believe you can click on that. Look, the preliminary release. So for the GDP, there are 3 versions of the GDP released a month apart, I believe. So we have the advanced, we have the preliminary, and we have the final. So if you see preliminary, you'll know that with your GDP, you'll know that's the second release for the GDP. The advanced release, so the first release for the GDP, it tends to catch the attention of the market and have the most impact. Now, we also have, I'm sure you may have seen it already, but the University of Michigan Consumer Sentiment Report, and these release both prelim and revised. So the preliminary release is the earlier release, and that tends to have the most impact. The rest of this I've pretty much explained. So as you can see, low volatility. Yep. Any questions on this before I move on? Okay. We have a question here. I think it's a question. Sorry, I'm unsure of the question, Meran. If you can maybe retype that, and I'll try and cover that for you. So look, just a quick talk about the central banks, because these are incredibly important to understand when looking at fundamental analysis. So fundamental analysis is composed of three core elements. We have the central bank policies, economic indicators, which I've just shown, and also geopolitical events. So the geopolitical events, as I'm sure we're all aware, a prime example of that is Ukraine and Russia right now. It's up and down, and a lot of trading desks are really unsure of how that's going to play out. One day it's for the better, one day it's not so good, and it can really affect. So geopolitical events can really affect the fundamental analysis that we know. So if the three components, so central bank policies, economic indicators, and geopolitics, are working in harmony, we should, in theory, witness clear trending markets, and these should present an opportunity for high probability trades. What you can do is once all those fundamental structures are in line, so the central bank policies, economic indicators, and geopolitics are in line, then you can look at applying some technical analysis. And then you can look at applying an entry technique in line with the fundamental analysis. Sorry. So you might, how do you use economic calendar on crypto? Whoa, I didn't know there was an economic calendar on crypto. Is there? I'm unaware. I don't really follow cryptos too much. I follow the technical side of things, but for fundamentals, I didn't think there was much. Yeah, I'm not sure. I don't believe there is any. I mean, there's news, of course. There's news events, the news releases. Articles and commentary and things like that. But there's no economic calendar for cryptos, as far as I'm aware. That's all right. No worries, Harold. So an economic calendar, as for me, I like to keep things very simple, Harold. I look at the economic calendar for the economic events. So as I've just shown, as you can see on the screen here, and also the earnings calendar for equities. As you can see, cryptos, there is not really much there. It's just look for the news, basically. So especially Mr. Elon Musk, he loves that. He loves Twitter, right? So just follow him and watch out for his tweets. It's not something I don't trade cryptos at all, so it's not something I can really comment on. So as I said, fundamental analysis essentially informs traders and investors why the market advances and declines, and provides you with a trade decision. And then again, as I said, you can use technical analysis to actually enter the market and control risk and apply some risk management. Look, major central banks, they meet most central banks meet every 4 to 6 weeks. And what they do there is they reorganize their sentiments each time they meet. Members, what they do is they discuss the overall economic conditions over the past month and assess through a number of guides whether rates should change or should be changed. Now more than ever, we should understand how central banks work, because they're in the news a lot because due to inflation and the interest rate hikes we're seeing at the moment. So we should really understand how they work, and it's something I would encourage you to look at. Okay, we have a few questions. Okay, me too. Okay, excellent. All right, so I think I've covered most things on the economic calendar. I don't really want to confuse anymore talking about central banks. You're more than I would more than welcome. I would highly encourage you to look at how the central banks operate, and highly encourage that. Let me just switch things back. 1 second. Okay, that should be showing there now. Just bear with me. Sorry about this. Okay. Okay, Q&A. Right, we're on to the Q&A session now. I think we have one more question. Yeah, is there any book you would recommend for beginners? I assume you're talking about technical analysis and fundamental analysis. Yes, okay, excellent. As I'm sure the Google search would bring up so many books. For me personally, as I say in most webinars, I would not focus too much on. I know it's incredibly tempting to jump on the charts and look for entry and exits and things like that. I'm not saying do not do that. What I'm saying is maybe focus on learning about trading psychology first, because it's a huge mind game. Trading is a huge mind game, and if you do not have control over your emotions, sorry, not control. Yes, control. You do not have control over your emotions. You can never remove your emotions. We're all human. But if you don't have control over your emotions, you're going to suffer. And, there's, I think, we actually have a webinar, I think, very, very soon on trading psychology. I think it's, yes, it's the next webinar. So look, if you're interested, do sign up for that. That's on the 24th of this month at 11 a.m. GMT, where I will go in depth about trading psychology. And I will also recommend some good books. I'll recommend some good books now. Trading in the Zone is a fantastic book. I will also recommend this again, but Trading in the Zone. Look, if you guys can read Trading in the Zone by the time we next week, that's fantastic. You'll know exactly what I'm talking about, and we'll be able to have a discussion regarding the concepts. But yeah, Trading in the Zone by the late Mark Douglas is a book I would wholeheartedly recommend. It's so easy to read, and it really will change the way you look at the financial markets. As for technical analysis, if you're interested in Fibonacci trading, I would recommend books by Daniel Kane, I think his name is, on Kane trading. Very good. Also, there's Caroline Broden, I think her name is. Those are the two for Fibonacci concepts. Caroline Broden, The Art of Fibonacci. I've read that book so long ago now, I can't remember the title, but The Art of Fibonacci Trading, I think it is. They're the two I would recommend for Fibonacci. For technical analysis, look, it's a bit unfair for me, because not unfair, but it's a bit unfair for you guys, because I've been through the CMT, and I would recommend the CMT for anyone. I'm not affiliated with the program, but if you really, really want to understand how broad technical analysis is, CMT is the place to go. It will really open your eyes to how much is, yes, Maggie, Trading in the Zone, and that's Mark Douglas. Let me just type that in there, actually. Mark. He actually passed away. I can't remember when he passed away, but it was a sad time for the financial world, because he provided some. Look, there's also some superb YouTube clips of Mark Douglas, and for those of you who don't like reading too much and prefer watching, more visual learners, look on YouTube. Just type in Mark Douglas, and there is some really, really good videos on this guy. He actually gets interviewed by TradeWise. I can't remember the name, but TradeWise or something, some establishment like that. And he goes into it for like 50 minutes and he talks about it, and it will really, really change the way you look at the market. You will no longer look at the market as in win and loss. You will look at it as probabilities and taking sample trades. And that's how you should look at it. You shouldn't look at an individual trade. Although it hurts, it's life. There will be hundreds of losing trades. You will have hundreds of losing trades. It's part of the business. And if you cannot accept that, you are wasting your time. I know it's harsh. I may come across as pretty cruel saying that, but look, it is the way it is. This is the business that you're in. You have to, there we go. That's the one, Maggie. Yeah. So Trading in the Zone, Master the Market with Confidence and a Winning Attitude by Mark Douglas. That's the one. Yeah. So I'd highly recommend that book. Yeah, as I said, for Fibonacci, I've given them books out. Yeah, I did type the name. I've just typed the name in there, Shabu. I think that's your name. I'm sorry if I've pronounced that wrong. Let me just I'll copy and paste it for you. No worries. So it's Mark Douglas. I would highly recommend this this gentleman. Also for, yeah, as I said, for CMT, for the technical analysis, I've relied mostly on that. So I know there's a few big books that are out there, but I can't remember the authors, to be honest. I apologize. But yeah, so most of my technical analysis came from the CMT, like the textbook style of technical analysis. For fundamental analysis, that's a difficult one. For fundamental analysis, what book would I recommend for that? You know, off the top of my head, I do not know. It's mainly economics, isn't it? So it's understanding the how economics works. So maybe look at more of the economic side of learning, if you're interested in understanding how the longer term trends of the market, and do look at central banks. Do go over them. That's how they work, how they operate, how they communicate, forward guidance and things like that. So we actually had the FOMC minutes last night in my time. Go over that, have a look at the FOMC minutes and what happened. That will help a lot, and that will help you. So when other like Bloomberg talks about it, you'll understand what they're saying. Okay. Okay, time is now of the essence. So I will round this presentation off. And so look, as I said, the next webinar is trading psychology. Look, I apologize if this webinar was a bit, how can I put it, subdued or dull. I understand the economic calendar is not the most exciting. It certainly isn't for me. And I'm pretty sure it was for you too. But you do need to understand how the economic calendar works. It's part of our profession. So as I said, the next webinar is trading psychology. Understand what it means to have a trader's mindset. And that's on the 24th of this month at 11 a.m. GMT. Do also make sure to register for the FP Markets Telegram channel. And that will give you instant updates. Look, guys, as I said, if you have any questions or you want any clarification of what I've spoken about today, look, fire me an email at marketsanalyst@fpmarkets.com. This is the direct email to our research team. So me or one of my colleagues will reply as soon as we can. Alternatively, send any comments or suggestions to the support@fpmarkets.com. But really, if you're sending any comments or suggestions regarding today's content, what they'll do is they'll forward it to me, so or the team, and I'll reply that way. So if you want a quick reply, marketsanalyst@fpmarkets.com. Okay, no more questions. Fantastic. Good. We have one more question. What do you think of the Philippine market? I don't watch the Philippine market. Sorry, Harold. I don't watch I can't remember what the index is, the PSEI. I might even be pronouncing that wrong. So no, I don't watch the Philippine market. I apologize, Harold. Will you give a free e-certificate for this webinar, Bella? No, we won't. There's no e-certificates for this webinar. I apologize for that. Okay, guys. So look, thanks so much for taking the time out of your day, evening, or afternoon. I hope you're more informed with the economic calendar now and can look at it with more confidence. Yeah, so thank you very much, and I'll catch you all again next week. Thank you. Bye-bye.